This one's near and dear to my heart because every day I turn on the news and I listen to, and I'll just give you my own right out of the gate. The Federal Reserve lowered the interest rates by 1/4 point, and then every freaking realtor and all my clients text me and go, "How much lower are the rates now?" It is not a direct correlation. The Federal Reserve rate is the 1-day overnight interest rates, the short-term rate. And so while mortgages are long-term rates. And so there is no direct correlation necessarily. In fact, this last thing that happened was that the market rejected only the 1/4 point move. And actually the rates went slightly up after the rates went quote unquote down. It was almost barely noticeable to the consumer, but it was on my sheet, I could see pricing slightly got worse. And because of there's a million other market factors. There's, how many people want to buy mortgage-backed securities? How many people want to buy long-term American trust? And honestly, there's some concern about the dollar worldwide. A lot of other countries are trying to get rid of their dollars and buying yen. And so anyway, but that drives me crazy. So that's the number one thing I would say I hate about the media is the general population. And maybe it's because it takes a lot to explain that, right? It doesn't necessarily affect mortgage rates. And it might affect your credit card or car loan more than it affects a mortgage rate.
Yeah, kind of piggybacking in that concept is looking at the national housing market, because housing markets are hyper specific. I mean, I can go in Citrus County and I can pinpoint and tell you this community is oversaturated and it's going to take way longer. But if you pulled that house out and you put it over here into this community, it'd be worth $100,000 more because this community has nothing for sale. It's super desirable. So when we look at this, like the national housing market, it's like, I can't apply that. I can say that's an average, but like it's basically trying to compare yourself to the population of the world. It doesn't work. So our real estate markets are hypersensitive to the specific areas, our community, like in our communities, our county, things like that. So even that the Florida market is different than the Citrus County market. But again,
you look like Naples is down like 20% year over year. Okay, we're down like 6%. I would say right now, actually, lower priced areas are the ones getting beat up because the people who want to buy and live in there still don't view them as affordable. I think, people say, oh, the rates are too high. No, the rates aren't too high. The prices are too high.